Good afternoon or good morning, depending on the time zone that you might be tuning in from today. Welcome back to another session at Fintech Nexus. I'm your host and moderator today, Todd Anderson, Chief Content Officer at Fintech Nexus. Modern data challenges, 4 key considerations for financial services. We're going to get into a lot of data-related items and kind of strategy-related items today. So, sit back and certainly take in the information, but we also want your participation as an audience member. So please, if you have a question, 10 minutes, 20 minutes, 30 minutes in, go ahead and use your Q&A function. Just click Q&A, input your question, and we'll bring those questions to our guest speakers today. If you have a general question, will there be a recording? Yes, there will be. Please, or if you need a phone number, a different way to tune in, please ask that via the chat. So we want questions in the Q&A box, and then general logistical type related questions in the chat box, if you can, please. Also related to this session, I want to thank Chuck and the team at Precisely. They've been a supporter of ours for many years now. Without partners like them, we can't do sessions like this. So thank you to Chuck and the team. And also thank you to Doug. Our speakers take time out of their busy days to join sessions like this. They prepare with us. And so we want to thank Doug as well, for his time and effort into this. And then final announcement from me, as we move forward here, May 10th and 11th, we have our annual in-person 4,000 plus people, New York City, Fintech Nexus USA. It's our biggest event of the year, biggest fintech event in New York. So get your tickets today. Check out fintechnexus.com. Still opportunities to speak and sponsor as well. And that's enough for me for the time being. Chuck, I'm going to turn it over to you. If you could tell the audience a little bit about yourself and Precisely.
Hi, I'm Chuck Kane, Vice President of Product Management here for the Verify portfolio. Precisely is an organization which is a culmination of a couple of acquisitions. So we were part of Pitney Bowes Software and Data. SyncSort had bought us in 2019. In 2020, we had rebranded as Precisely. And as part of the Precisely story, we're really talking the story about data integrity and data management and looking at and holistically understanding everything around how you integrate data into an organization to be able to be more effective and be able to drive value throughout that organization, business value, operational value, analytics value, all the various different value statements you can think of. Myself, I come from a background that was, before I came to Precisely, I was in industry. I had been in financial services. I had been in banks. And so I have a lot of experience actually living and breathing, sitting in the same seats as many of you in the audience and dealing with data and looking at the data transformations as a whole. So really looking forward to this discussion today with Doug and with you to better understand and really be able to talk about how data is actually influencing organizations and where we pivot to going forward. So Doug, over to you.
Yeah, thanks. Appreciate that. My name is Doug Lopp. I am the head of technology for Bend by FMBO. Bend by FMBO is a new brand, new product, technology product that we've been focused on over the last couple of years. But really, we're all part of First National Bank of Omaha. We refer to ourselves as FNBO. And FNBO has been in business for over 165 years. It's a family-owned mid-tier bank, largest U.S. family-owned bank in the United States. We have over 5,000 employees, $26 billion in assets across 8 Midwestern states, over 100 locations. I think we're the 5th largest agribusiness lender in the United States, and so I think maybe top 15 and as a card issuer for commercial business. So we span a lot of different segments: commercial, consumer. We're card processing, not just being a bank and holding deposits and lending money. And so I've been with the bank since 2012. Last 10 to 11 years. Prior to that, I worked 26 years for a software company called ACI Worldwide. And so I've been an engineer, an architect, a technologist at heart for decades, and very passionate about technology to this day. A lot of lessons learned over that time. Most of my experience comes from online transaction processing in the credit and debit card space, working with networks like Visa and MasterCard and so forth, Discover, Amex, those card networks. And just over the last couple of years, and even before then, fintechs have really been, driving change and creating disruption in various areas. And the last couple of years, part of my job is just trying to help our innovation and disruption team figure out where it's coming from, how it could affect us. And we'll talk later about how that drove Ben by FMBO and how we got to where we are today. Todd?
Thanks, Doug. Thanks, Chuck. I think I'd like to start, kind of with a stage setting question. When thinking about innovation and kind of the pace at which things are changing these days. And Doug, I'll start with you, and Chuck, I'd love your perspective on this one as well, which is, how important is it before making some of these technology and these data and these strategy decisions is to get buy-in from those most important within the organization, the executives, the chief people that are running either a bank or a fintech, and how much of a barrier can it be to doing some of this innovation if you don't have that buy-in from the top down?
Yeah, I'll take a stab at it. This is because it's still fresh in my mind over the last couple of years. When we, I think it's critical, number one, and I think it's also educational for those executive leaders to really understand the landscape and how things are changing, and how technology and data are driving a lot of that change. And, what does disruption mean to your business? And one of the things I think we've learned in working with our executive leaders is that business and technology are starting to form and align very close, much more closely than they ever have before. And the term we like to call it is indistinguishable. So when we start talking about the outcomes and the strategy and the goals of where we're headed, those two no longer conflict. They are starting to align. And I think understanding why that's happening and how that merge is occurring, I think is a good learning opportunity as technology leaders in communicating to our executives on what we're seeing, why we're seeing what we're seeing, and how do we go about moving forward and leveraging technology and data in a way that can take us into the next decade.
Yeah, I agree with that. And having been in industry and then being in product management here, like it precisely, it's very important to really have that buy-in from the top down, both from a executive buy-in, but also from a cultural buy-in, right? Because when you think about organizations and you think about this merging of the various different technology in the business, we're really looking at how we merge those cultures together. Because when I was in financial services, largely what we had seen is a real separation between, right, the business and technology. The technology teams were largely the stewards of the data, the stewards of the technology, and sometimes often labeled as the owner of both, right? And the business was more of the driver in the sense of, here's my business goals, here's my business initiatives for this year, here's what I need as far as the delivery and the support. But it was really IT that was driving those deliveries and driving that support and giving, hopefully the business the tools necessary to be able to hit their objectives. Now, in today's world, like we see with many different things where technology has influenced, a lot of these things, is that merger where, a business analyst truly is somebody from the business who actually has ownership of the data, has ownership of the process, has ownership and understanding of what the outcomes are going to be. But you also have IT, and largely what I've seen inside of financial services is, you have a lot of MBAs that are sitting over in the IT organization, not a bunch of always just computer scientists or data analytics, but people who really truly understand the nature of business and how the business is actually needs to operate and be able to be effective because again, not just as a steward, but as a champion of the business, I look at it as more of a champion, is able to help to affect and drive and partner and, if you will, really, have a go-to-market strategy that leverages technology as a differentiator, not just as a tool, right? And it's really those differentiators that really drive, I think, value back into the organization, value back to the executives, and really helps tell a clean story.
Related to some of what you were saying there, Chuck, obviously data driven decision making is growing and increasing in importance, especially in financial services. And with that, though, accuracy and quality is probably critical above all else. And so how are, the firms that you guys work with at Precisely, how do they address some of the challenges that come with ensuring, accurate and quality of the data, especially in some of these organizations where, they can be as vast as they can get with, different departments, different levels, who has access to what, how does some of this play into, organizing and ensuring both accuracy and quality?
I think accuracy and quality are components of a major piece that maybe you didn't mention, but I think is important, is trust. And it's trust in what you're looking at and understanding that helps drive the best outcomes and the decisions that the organization is trying to make to be able to hit those objectives that I was talking about earlier. So accuracy, the integrity of the data, knowing that you've done all the blocking and tackling, all the foundational work to build those components, help layer on, right, just the pyramid of trust. And so once you actually have the foundation of trust, now you're able to really layer on top of that the operational and or the analytical and or, right, the business focus around how you take that data and start to drive it as an asset, right? And I think many times we think in financial services and banking and others that, our assets are dollar signs, right? It's money. But in reality, the competitive differentiator is trust. And whether or not an organization trusts you with their money, and or individuals trust you with their money, or they trust you with, the be able to have services to be able to help them to affect their lives or their businesses, right? It's really all about delivering on your promises around the trust. One of the organizations that I worked with was really talking about, as a tagline, is meeting the community where they are and being able to be effective with them in their financial decisions and driving, if you will, from that holistic value. Yet their technology at the time didn't allow for that sort of same message, because I had to log into one area of the website for seeing my credit cards, another one to be able to see checking, another one to see my mortgage, and it was all very disconnected. And when you have those disconnected relationships, it's really hard to understand how you actually can have an impact on an individual and or a business. And in turn, do the business have trust in you? Do they have trust in what you're doing for them? Or are they able to really see the value of doing business with you? So I think trust is a major component of really looking at the accuracy and the foundation in that pyramid of data.
And as a reminder to the audience, if you have questions, go ahead and input them via the Q&A function. We'll pose those questions to both Chuck and Doug as we move throughout here. Doug, I wanted to turn to you, because I think, the story of Bend and how you guys set it up, I think, is an interesting one. And when thinking about that, banks are always tasked with, a technology decision of, do we build this ourselves? Do we partner with someone, whether it be a fintech, whether it be, firms like Precisely and others that kind of can help you connect the pieces and get to where you ultimately need to go? Do you partner? Do you buy something? I mean, how, did Bend and ultimately FMBO think through some of how you guys came about? And tell us a little bit more about that story. I think there's some interesting tidbits that the audience would find unique.
That be glad to. First thing I would say is, you don't have to know everything to begin to build something. So, I think you take those learnings along with you as you go, and you kind of take a no fear approach, and you have to be willing to fail, to get smarter, to get better, to be more efficient, to understand your customer better. And so sometimes when you're innovation driven, it's a little bit of a lonely, bumpy road. And my boss always talks about, how innovation always seems to come in through the basement door. So and it's very messy and dark, and it's just not for everybody, but it is super exhilarating and exciting. And so our journey, in terms of buy and build, I mean, you can go to Gartner and you can read the book on buy and build and follow the process, and or you could take more of an innovative approach where you go figure it out on your own and you learn as you go. And that's kind of been our approach, where we started with this concept of what in the world is banking as a service? Like, what does that mean to us? What are fintechs doing in that space? And so really it started out as a learning and a journey. And then what we started to learn is we started to narrow, and instead of going more horizontal, we started identifying an area of a vertical area to go. And that happened to be, in this specific case, through some market fit based adjustment, our market fit kind of research we did. We started understanding that there was actually a space and a gap in the credit card space for providing embedded financial services for credit. And the learning started there. One of the first steps I think that we took was really understanding, is this, and challenging ourselves, is this something we should be invested in learning more about or doing? And I think one of the things we learned is that our business was already being disrupted. We just didn't know it until we started talking with our sales folks and saying, hey, we're getting these companies, these fintechs are coming in, and they're talking about APIs, or they're talking about things that and we're trying to figure out we don't know how to respond to some of these RFPs. And so what ended up happening was that we thought, well, maybe we should provide a more narrow focus, and not, instead of banking, maybe it's credit card. And that's how we got started. And the first step, back to the very first question about getting buy-in from your executive leadership, that was exactly where we started. We told them, we explained our journey, we explained what we learned. We talked a little bit about the market fit and the opportunity, and we talked even with them a little bit about the technology and what we think our role is. And then we started exploring partners, like Marqeta is a partner of ours. We knew that if we were to go fast, we couldn't build everything. So we looked for strategic partners that would work, that were willing to work the way we wanted to work. And what we really wanted to do was work more like, not like a bank necessarily, or an IT organization, but we wanted to work more like a software product development organization. And that's kind of how we got started. So we had a really good partnership with Marqeta. Alloy was another a strategic partner for us. And we started these fintech companies, and we started working and communicating, collaborating like they did. Slack was a big tool that we used. I know many probably here today, it's a very common tool to use, but we kind of started there. We started to understand the product space. Where should we start? What does it mean to be product led? What does it mean to build an API first platform? Those were all learnings, and we got buy-in. The first year, we got $5 million from the executive team to go continue this journey, and we gave them 90-day updates. And as we started to show the learnings and what we were able to build in, at 3-month increments, they started to get excited about, like, shoot, this is a real thing. And then we ended up getting investments for the next year. And after, I think, our first line of code went in October of 21, by October of 22, within that 10-month to that year period, we had identified our first customer, Greenlight, and was in production with embedded services, a credit card platform partnered with Marqeta, in production with somebody else's mobile digital experience and their brand, and with embedded credit card capabilities in the Greenlight brand. And so the first card product was a Greenlight credit card product. I think it's called FCC. I think it's called First Family Credit Card, or Family Card, something like that. And here we are. We achieved our MVP Fast forwarding into 23, and we're now focused on the new definition of hard. It's no longer about MVP, it's now about scale. And so it's continuously learning and not trying to worry about solving everything up front, solve the most important problems first, learn from that, and begin and continue to grow. And really the key to success was just a no fear approach. I always call it team of teams. I think we have 5 product teams, all established. I think we started with 2 or 3. And coincidentally, data was the 3rd team we built, and we missed on that. And so we had to, so my colleague here can probably relate to this. We actually started to learn the importance of data and the integration and how to use that data to better run our business, to make better decisions as we go. And we had to make a strong pivot and invest more into getting our data strategy going at the same time. And so it was just this whirlwind of things going on at once. And it truly is, you feel like you're coming through a basement door. Everything's messy. We're wearing multiple hats. But at the end of the day, when I use the word team of teams, what we realized, what made us successful, were all of these teams coming together on the same turf. We didn't have turf wars. We weren't, competing for priorities with other areas, in the business or in technology. We took technology, product, and business, and we put it together. And that's what I mean by it becomes indistinguishable when the same outcome is everybody's outcome. And we delivered on that and are stronger for it. And really, we all work on the same turf. And I think that's the key, is getting those folks together, fully empowered to make decisions, whether successful or failures. We grow on the success, we extend from that, and then we learn from the failures and we pivot. And that's a little bit about Bend. Along that way, we established our brand, Bend by FNBO. We are under the umbrella of FNBO, the bank's charter. And so we have to align with, security and compliance like any other part of the business. But in essence, we are making our own technology decisions. We're making our own product decisions, and we're making our own business decisions. And today, even we still continue to do 2.5 years in, we still continue to do that 90-day update with the executive team. And they've learned a little bit about everything. They learned about technology. They learned what API first means. They learned about our challenges with data and what data integration is and how important that is to learn from our data. And they learned about the business and what it means to be product led. So really, it's not just the technology, it's truly a different way of working. And that's probably been the biggest learning today.
Jack, there was a fair amount to unpack there, but do you see some of what Doug explained? Do you see in the firms and the clients that you guys work with, some of those challenges across teams not working well together, not getting enough buy-in, maybe not being as data forward as they should be? What are some things that you see that kind of end up being impediments for teams when they're looking to launch new products and they're looking to grow in certain areas of their business?
Yeah, I think there's a transition that is happening in financial services that probably looks very similar to what Ben is doing, what Doug described. When he was describing, the role of a product manager, right? And really looking at the delivery of an MVP, delivery of technology solutions, the ability to be able to iterate and deliver on, solutions. And a lot of times that requires failing fast, right? And leveraging technology that can assist you to fail fast, but also get to the right answer so that you can actually be successful. The last thing you really want to do is get into a really long, drawn out phase of a project that could last 9 months to a year, really not deliver on any business value. And then at the end of the day, when it's finally delivered, it's like, that's really not what I wanted, right? And that is not kind of, and so that's not what the organization needs. That's not what banks need. They really do need that sort of support where you're talking about this API first, this access to data, this cultural change, this ability to be able to solve really hard problems. And when you look back in the rearview mirror and you think, man, those problems seem like they were really hard, but they're easy, right? And you laid that foundation of success on top of that actually now graduates you to even more success going forward. And there's nothing like, having pivots in the road, but there's also, when you start off with a failure, it's very hard to succeed, right? But when you build that successful engine from the beginning, you actually have that pillar, that pyramid of success. The other thing that I really think about is when you talk about build, buy, or partner, I don't know how much there really is a differentiator between those three anymore, in the sense that you can buy technology, but technology by itself doesn't solve your business problems. Technology by itself doesn't deliver on the value. It takes people that actually are building around that, around the organization, around the business, around the objectives. They're building the frameworks that are required to support or use technology. Technology is just an enabler. It's an enabler of success, right? We'll talk a little bit more about what some of those enablers are, like AI and ML and all the other language, but you really have to lay that, that support system in place where people are building out the ideas, the objectives, the goals, the frameworks, and then you take tools and you apply them where they make sense inside of each of the various different components of that framework. Whether it's data governance, whether it's data quality, whether it's data integration, whether it's geo-addressing, whether it's enrichment, whether it's all of these things that you look at, it's really, what are you trying to solve for? And then where's the right tools to be able to solve for those problems? And sometimes there are no tools. Sometimes you do have to build some of those solutions. And that's part of what you look at as a product manager, is to say, where are my competitive differentiators in the marketplace? And are there capabilities in the marketplace that will help me to understand or be able to deliver on those value statements? And if not, what do I have to do to be able to start to build those things to be able to, drive out that success? And I think that's really, Doug, what you talked about. And I love that story about how Bend is really adopting a lot of these practices of both partnering with organizations, buy-in technology, but also likely building technology or taking the technologies that you bought and building around that, right, the framework for success.
Yeah, 100% agree. Just one thought. As you were talking, I was thinking about, and then even some of the experiences about, when you do have dependencies on partners or on another technology solution, it's always just being conscious about making sure that I've got enough abstraction built in that if they aren't the right answer, it doesn't take me down. I mean, I'm able to pivot or take a different direction if I need to. It's just building enough insulation and abstraction in, whether it's related to your API platform or your data platform, to be able to pivot in the case that you need to change partners, if that ends up being a real thing. And so it's just something you need to be conscious of.
Yeah, we do this, especially when we think about our SaaS capabilities, right? We have these frameworks that customers leverage for lots of different purposes, right? It could be address validation, it could be geocoding, it could be email validation, phone, it could be any kind of number of various different capabilities. Some of those capabilities we deliver from in-house, some of those that we partner with others. But none of those relationships are permanent, right? And there are times where you might need to change the partner, you might need to change the relationship for various number of reasons. But the customers, we have to do it in such a way that the customers are able to continue, right, to leverage the highest value of accuracy, integrity, and trust in that data. While at the same time, we need to be able to manage the business and the partnerships to make it very easy for companies to leverage that, to use that data. And even further, and you look at it from a business perspective, like when I was at Fifth Third, when we initially were standing up our first MDM, we called it our Enterprise Customer Information File, or ECIF. I spent a lot of time really working through technology challenges at first, and we ended up doing what we call that initial load of 20 million plus customers. And because it took 3-4 months to get there, we finally saw the results. And when we saw the results, it was like, that's not exactly right. I mean, we need to change this. And it wasn't a popular story to go around the organization to say, hey, we probably need to redo this initial load. We need to do, because here's all the problems that we're seeing, and here's the things that we're going to be able to correct. And I remember my boss, I was in a meeting and I was doing the proposal and he didn't like it. He was like, He wanted us to forge on. And I was like, I don't think forging on is the right choice. He got up, he looked at me dead in the eye, and he said, it's all on you. If it fails, it's on you. And I was like, I'm more than happy to take that failure and run with it, because I think we're going to hit success. Not only did we get success with that initial load and really driving that, but we tied it in from an API perspective into the branches, into the ATMs, into the operations center, into even our bank processing around credit cards, like you were talking about earlier, credit card processing systems, and understanding how we are able to better leverage data to support loyalty cards and be able to support all kinds of various different personalization programs. So it became a wild success, but we would have never gotten there if we hadn't made certain hard choices along the way and decisions that maybe weren't always popular, but definitely we continue to focus on what's the business problem, what are we trying to solve for, and how do we actually get there. And sometimes, it's not a clear route. Sometimes you have to take a left, you have to take a right, you have to pivot in various different ways. But when you do pivot and you make the right decisions on those pivots, it's because you've learned from experience.
Yeah.
Chuck, you referenced it a little bit ago, which is, new technologies. There's AI, there's ML, there's many others that are out there. How are these different technologies unlocking value for financial services firms? And there is a lot of hype around some of these, and is there the decision always to add technology, but in some cases, is it always good to not necessarily make that technology choice if it doesn't fit your organization the right way?
I think as we talk about the layers of technology, AI and ML is just another layer, right, that we're adding as far as the value add. If you roll it back, you think when I came into industry, ETL was a new thing, right? When you actually would think about ETL type tools and the integration of those types of tools, now every day everybody thinks about ETL as like, that's just part of what we do. In fact, we don't even think about it as ETL. We think about it as ELT. We think about it in various different ways with cloud ops. But if you really, break that down even further, doing ETL a lot of times was like coding. You're sitting down and actually writing all the various different code that is necessary to be able to perform whatever that function is. And that's before you even get the data into a position where now you might be able to start applying data quality, like parsing, normalization, matching, right, consolidation, all these various capabilities. And again, all of that was done through largely coding and some configuration, but largely was somebody sitting down at the machine and trying to drive out the end state purpose. Exposing the data through a web API or web services, right? There was not a lot of low code when web services first came out, so people were in there coding that. There wasn't a lot of coding when you actually wanted to display it onto a screen, right? There's a lot of work that was done to tie in those interfaces into those applications. But over time, what we've seen is more and more capabilities, more and more technology that have enabled and reduced the need to be able to drive out as much code or get into more of a low code or faster enablers. And that's where I think AI and ML is they are just an enabler of being able to quickly fail or quickly succeed and being able to deliver on the results that you want to deliver from the business perspective. So instead of trying to figure out, okay, how do I normalize and parse this data through lots of various different profiling techniques and visually writing down all the business rules, you can actually take your profiling, bring it in, automate through AI and ML. It'll start recommending, if you will, the various different suggestions that it will do. It will actually generate the code for you. It will actually allow you to then automate that so that now you can actually deliver on those results much faster, and especially like around matching. Matching is one of those, type of projects that it's an art and a science. So you really have to understand the whole dynamic of what probabilistic and deterministic matching is. And using AI and ML on top of that really streamlined that process, where it takes from going into a month or 2 month, process of many iterations of matching, review, rematching, review, all that. We're able to really leverage the machine to say, here's the recommendations. You make certain decisions. So you make decisions on whether that's a match or whether that's a non-match. It teaches the machine through a human in the loop sort of process that will say, okay, it's learned from that. It's actually now gearing up new models. And over time, you actually drive those models to where you want to go from an initial load or from a delta processing or whatever the case may be. But more important is when we talk about data decay over time, Gartner says that you can lose about 2 to 3% of the quality of the data in just a single month. And when you aggregate that out to a year, you're losing up to 30% of the hard work that you put into your data if you're not paying attention to that. And I think not only is there data decay, but there's also this thing called data quality decay or matching decay. Decisions are that you made maybe a year ago inside of your solution are going to change as you onboard new sources, as you look at customers from different perspectives, as you deliver on a lot of that value. So how do you learn from that? How do you grow from that? How do you have no fear and been able to make these kind of changes? And what we don't want to do is big bang changes. We want to basically use this automation to help us to iteratively make small changes. So when we do look back in that rearview mirror, we look back 12 months ago and we think about the changes, they didn't seem all that intimidating along the way, right? They were very small things that affected very positive outcomes. And that's where I really think about where AI and ML is helping to iterate on those small changes to affect, right, the long-term goals or the strategy within the organizations.
Yeah, I was, as you were talking, I was thinking about API first and why did I use that term? I can describe what it means to us, but then I started thinking when you talked about data quality, then I started thinking about, well, wait a minute, what about data quality first? And it was the thought was that as data gets ingested in through our APIs or through our webhooks, through events and such, is being able to ingest that data and go through the quality step right up front. I think the value of us being able to work that way is because we don't have those dependencies on diverse legacy systems that we have to do a bunch of matching rules to pull the data together and figure out what's the same. But so anyway, I just thought that was an interesting thought of thinking of data quality first. So I thought I'd share that.
Doug, and I'd also be curious, we talked a lot through the AI, ML, a technology first approach, but banks, especially banks who've been around a fair amount of time, have a legacy system in place as well. And so there's a lot more considerations than maybe an early stage fintech or a bank that maybe a neobank that might have come on just a couple of years ago. It's a lot easier for them to say, hey, here's our modern stack. But how different can decision making be when you have that legacy versus new technology, and making sure that things don't break in a way that puts the customer off?
Yeah, it's a great question, and there's no right or wrong answer. It's more of a strategy and what you're trying to accomplish. I would say the bank's legacy system is probably not just First National Bank of Omaha, but the legacy systems in general. They served a purpose for many decades, and they still are driving and running your business. And you have to make very strategic decisions and commitments, and some are very costly. It's like you can't afford to screw up a modernization effort if you're thinking about I'm replacing a legacy system, right? Because what'll end up happening is you'll end up throwing good money after bad. But then you might take a step back and say, well, maybe I'm not focused on replacing it. Maybe what I need to do is do just enough new tech and put it on top of the legacy system, right? And have the appearance to our customers that, hey, you're getting more value, or you're getting a better experience, or a 360 view, or whatever it might be. And we're building features and capabilities on top of what we have, giving the illusion maybe that it's something new and modernized. Not anything wrong with that strategy either. There you can get some quick wins that way too. But at the end of the day, when the customer in the future, or what drives customers in the future, come along and they demand or need these new features and capabilities, or think about finances in a different way, in a different light, and you're like, okay, well, I can only build on top of my legacy systems what that legacy system can support. Do I want to pay the cost of trying to figure out how to change and enhance a legacy system that's been doing things a certain way for decades, risking the technology debt that's probably embedded into that, and take the risk of making changes that would probably be slower, require more manual testing, all the things that would happen that you wouldn't be able to deliver on that. And when you think of it from that way, outside in, then you start rethinking, well, what if we were to look at this from a product perspective? If we were to go build this, what would we do? Who would we partner with? Is that a third option? And so, if you're wanting to transition and get to the cloud, the quick win is a lift and shift, right? I want to be able to take what I'm doing today, try to not change anything if possible, uplift it, put it in the cloud. And then you have to think, well, what's my outcome? What's my goal? Am I trying to get out of a data center and reduce overhead costs or the number of resources that I need to run it, but not necessarily reduce the cost of what it takes to maintain something? The cost of the compute might be the same, right? And so you have to really understand your reasons for doing that. The other thing is to look at the business and make better business decisions on, hey, I think this is an opportunity for us, like credit card as a service. Maybe we should look at how we, are running a certain business with a certain technology stack, and look at it from a different lens and figure out and maybe talk to customers. What do you really want? Like maybe we should consider building a new product and not necessarily investing in, the movement of something that you still end up with the same thing. But maybe how to do something totally different, and then leverage new age technology to get there faster. I'll give you an example. We were just looking at Quantum DB. It's a blockchain built database that it builds that can support an immutable transaction ledger. Well, when you start looking at new technologies in that light, you start thinking about, well, how could we do a system of record differently? Do we need to build all this complexity that we would normally have to build? Or these new age technologies already building and incorporating that for us? We just have to figure out how to use it, right? And so you build your technology on top of that, and then reducing the complexity. And so there's a lot that goes into it. There's no right or wrong answer. It is a challenge. I guess my advice would be, make sure you know what you're doing, why you're doing it, and make sure you understand the value that you're going to get out of it. All right. And then I know the dollar cost, you're always looking at, well, we only have so much to spend. Obviously, you have to identify what it is you're willing to spend, and don't try to solve everything up front. And I think my colleague here talked about iterative, being iterative about it. I think you need to take a very similar approach to that as well. Chuck, do you have any thoughts on that?
As you were sort of talking through that, I was thinking to myself, I remember I had an executive back when this was probably almost 20 years ago, where, he was like, we only do these kind of projects, these, replacement projects for, like, say, a customer information file, right? Every 20, 30 years. And I remember back then thinking to myself, my God, if this thing still exists in 20 years, I'll be shocked. Mm-hmm. Yet today, I actually have a friend of mine who still works in the same organization. She's the chief data officer over the MDM platform, and it still exists, right? 20 years later. And I remember looking back saying, how I thought that was crazy. And now it's like relevant, because in a lot of ways, that technology is a building block that has now continued to mature. But it continues to mature because the other Legos, the other components that weren't available when we built this, have been built, right? Have been offered. And organizations like, Fifth Third and others have adopted those technologies and plugged them into some of the legacy capabilities to be able to modernize, as you were talking about, the capabilities that you're really looking for. Like, we've talked within, we've delivered on the value here at Precisely of graph technology, right? Leveraging graph technology to support and pick up data from relational systems, but be able to better understand, if you will, that single view dynamic of a customer and all their accounts across various different locations, across various different type of transactions. And really, instead of just focusing only on those nodes, we also focus on the relationships and the value that those relationships have. And only graph technology really is good at doing that, because if you have a property graph that describes the relationship between you and I, we have a strength of a relationship, but I have a very different strength of relationship between myself and my kids or my wife or other people, right? And so those relationships really do help you to read between the lines, the story that you're trying to to tell, and really the business value that you're trying to deliver. I would also say one further thing is that technologies that we work on today, things that we're doing today, they're probably going to be legacy tomorrow, right? Because there's such a fast moving pace of things in the industry. I mean, when I came into industry and was building and supporting .coms, cloud technology, we didn't even know what cloud technology was. We just thought, hey, this is a new innovative way to deliver on value through a remote data center. But as time's gone on, cloud has really become very important, and not just cloud for the purpose of using it as a data center, but also as a way to scale, right? And to deliver on that scale. And so even here at Precisely, we're in the midst of a transformational effort of delivering on what we call our data integrity suite, where we're taking all the capabilities we have from data integration to data governance, to data quality, to geoaddressing, enrich all those capabilities, and we're modernizing that to be able to support that inside the cloud so that you can run these inside of your Snowflake or your Databricks or your Amazon EMR or whatever you want to, and really be able to scale. Because when we were first implementing these technologies years ago, it was like, hey, if I can get 2,000 transactions a minute, that's really fast. Now it's like, if I'm getting 2,000 transactions a minute, that's super slow in the sense that how you can scale and be able to drive that value across the organization. But I also think that scaling is what's also given us the capability to leverage modernizations like AI and ML, because you can really scale out that learning framework and be able to support it with a whole lot more horsepower that just wasn't available years ago, and continuing to double and increase every single year. I'm watching the industry and just thinking and amazed myself that what we built years ago is still relevant, but what we're building today is going to be relevant 20 years from now.
Yep, absolutely, and everything has a shelf life as well, right? I always think, just what recently over Thanksgiving and what happened to Southwest Airlines. That's a reality, right? And so it hit the airlines, right? The financial services, we're probably in line too, right? And so we do have to think about those things. And I think, with cloud technology, one of the things you get out of it is resiliency, the ability to auto scale, things like that. So even if you do a lift and shift, there is still value in that, and where you can, get some of those efficiencies. It's just, I'm not sure it's a cost saving thing. At some point, these systems that have been, running businesses for decades upon decades are going to they're going to need more than just a refresh. And I think there's opportunities, if you can find the right market fit, of really identifying where would I start if I was to greenfield something for my business, and truly take that, greenfield approach to building something new. And it's not a one size fits all. It's not for everything. You really need to be strategic about when you would invest in doing something like that. But I think the time's coming for certain systems and things that have been around for a while. I know the banking industry is, on the cusp of this, is just knowing that, shelf lives, things that are put on the shelf eventually will expire. And did the Southwest Airlines is what, I keep thinking about.
Yeah, and some of those mistakes or some of those incidents stick with those customers, and it's beyond just whatever that one incident might be.
Yeah.
We have just a few minutes left here, so I wanted to maybe look more towards the future in terms of where we're going when it comes to some of the stuff we've been talking about here today. If anyone has any final questions, please input them into the Q&A box. But obviously things continue to move fast. The regulation is always thought of, when it comes to financial services. Kind of where are we heading when it comes to data challenges and continuing to modernize? Are we still on this iterative path and continuing to move in that direction, or is there the potential for an extreme makeover of what we might see here today? Maybe Doug, I'll start with you, and Chuck, we'll get you in terms of kind of final thoughts.
Yeah, I think one of the biggest challenges is just going to be around cybersecurity. I know we've had, the banks have security policies that have been in place for a long time. And as you transition into the future, new technology and cloud, you have to revisit some of that compliance and some of the security measures and things that you've had in place in your policy, because it doesn't necessarily align completely with where where we're headed. And so understanding how to navigate that and making sure that you have assurances and you have the right practices and policies in place to address the cybersecurity of the future, I think is a key important item. I think the compliance and regulatory piece as well, as new business models emerge, like embedded finance. If we no longer own the digital experience, how do we ensure compliance and regulatory needs around that mobile app or that brand's experience and what they're delivering to the customer? How are we involved on the compliance side as a business to ensure an audit and make sure that they're not doing something that's detrimental to the customer or to our business or putting our business at risk? Those are a couple of non-functional things I think that are essentially very important to the success of banks and financial services in general, to make sure that when we do choose to go create new products and build something new and new tech and new data solutions, that we're doing it in a way that still protects the customer, protects the integrity of our business and our data.
Yeah, we see very similar things. Of course, I've been out of the financial services for a bit now, but we see a lot with regulatory bodies, right, across the globe, really affecting change. You think about like GDPR, you think about CCPA, you think about financial crimes and compliance, you think about synthetic IDs, you think about all these various different, initiatives that you need to be compliant to, that you need to work, to be able to resolve. And a lot of these have all of the focuses really on protecting the customer, right? At the end of the day, it really is about protecting the financial fidelity of a customer, of the institution, of frankly, the economy in a lot of different ways as well, right? And you've got very large organizations like, Enron. I mean, that was a perfect example of an organization that went afoul without having some appropriate regulations. But I also think too that you can probably pivot too far on the regulatory side as well. And so there has to be this balance. And I think that balance always is looking at it from the customer's perspective and looking at it from the personal perspective, in the sense that, do I want to do business with somebody where I have a fear of fraud, or I have a fear of my money being stolen, or they're not going to protect me in the event that events happen? I think we've all probably had instances where we've gone somewhere like a bar and left our credit card, and didn't realize that we left our credit card because we paid our bill with our debit card and walked out. And then you look on your next statement and you see, boom, there's a bunch of things that were bought that I didn't buy, right? And I can call, if I call the bank and they're like, they understand that I did not intend to leave this behind. They're there to help me to ensure that they close the account. Maybe I'm not even going to be charged for the actual transactions themselves, and likely maybe they'll catch the fraudster that did those transactions. That, in my mind, really builds trust. Again, back to that whole theme of trust and integrity, and really, I think that's where the regulations really play is making sure that we don't over pivot and spend so much time thinking about regulations that we don't drive value. At the same time, making sure that we build from the frame, from the bottom of the pyramid up, the capability to deliver on our customers' expectations. Because again, even in financial services or insurance or even a retail transaction, I mean, you mix the two together where you have a digital, experience with a retailer where you're doing a financial transaction with your credit card. There's so many organizations that are in play in just that very simple transaction, and each of them have to have their responsibility to the customer to make sure that the fidelity of that relationship remains whole, right? That you remain, that you remain whole in that transaction. I remember when we first started doing purchases online, it was like, I'll never stick my credit card in that machine. If I can't buy it, if I can't hold my card and actually do the transaction, I'll never do it. Now I buy everything on Amazon or via online. I barely go to the store. And if I do go to the store, it's more because of convenience, of something that I want right now versus something that I'm not willing to wait for. But even today's world, it's like, I can order from Amazon. It's being, drop shipped to my house the next day. It's amazing how fast those transactions happen. But again, that's because they're the right frameworks, the right things are in place. But the criminals that are out there, they're smart. They find ways around these things, and certainly we have to always look at those and protect the business and protect the customers.
I think that's a good place to end. Protect the customer. Chuck, thank you very much for your time. Doug, thank you for your time and effort. Special thanks again to Chuck and the team at Precisely for your continued partnership and support. Thank you to our audience. Obviously, we can't do these sessions without an audience. As a reminder, we have our USA event May 10th and 11th, New York City. So check out fintechnexus.com for events that are in person, as well as more digital events we have coming up. Thanks again to everyone. Enjoy the rest of your day.
Thank you.
Bye now.